stock market for beginners. And these are the free webinars which I will be broadcasting only for you. It's for the sake of giving back to the community. It's been 14 years that I have been in the stock market, and this is the best time that I can give back to the community. So these are the live sessions which I'll be conducting usually around Wednesday and Saturday. Yesterday I was not able to, so today I am presenting the live webinars, and here you can ask any questions, and I am here to answer any question you may have with respect to stock markets. And I will be teaching you all about the basics of stock market in these live webinars which I'll be conducting. As I already mentioned, this is being this is being live on the YouTube channel for today. From next week onwards, I'll try to air it both on Facebook as well as YouTube. So let's jump in to the live webinar of basics of stock market for beginners, and let's jump in to the whole of the slides. Yeah, I will try to make this as much as possible to be interactive. If you have any questions at all, you can type it, and I will give you the information which is required for uh, the whole of the basics knowledge which you would require in order to trade in the market or invest in the market as well. So let's jump into the basics of stock market for beginners. So just a beginning, this is a head-on introduction to the basics of stock market. Whatever I think is important for you, that is what I'll be teaching in these live webinars. Okay, so let's jump in. So don't be left behind, and it's high time, it's the highest time to start learning about the stock markets, because now the Sensex and Nifty is at the top. Okay, it's at the top, and it is the highest that ever the market has actually gone up to. However, it's very much said that during the highs, during the bullish trend, even an ant can make money. However, why should you be left out? So, if an ant can make money, then you can make money in the stock market too during the bullish terms as well as the bearish terms. So, let us jump in and let's understand the stock markets, which is the systematic approach to start trading or start investing in stock markets with the easiest steps you can take in order to go for the stock market to invest. So let's jump in. Before you invest even 1 rupee in the stock market, it is very much important for you to understand the Warren Buffett's rule. Before investing, you should know two rules. As Mr. Warren Buffett says, Warren Buffett's rules are very simple. Do not lose money in the stock market. That's the rule number one. And the second rule, which Mr. Warren Buffett talks about, is do not ever forget rule number one. So it means that basically you should never lose money in stock market. And how is that possible? That's only possible with the knowledge which can be imparted and which can be imported to your brains. Okay, so that's very much important. So if you have any questions, I'll take it, and there is a Q&A for this particular session as well. So I'm Ashok Kumar. I have completed my PhD in applied mathematics, and I have 14 years of stock market experience from 2008 till now. And from 2013 onwards, I am a full-time trader. So I don't trade with my own hands as of now, so to say. However, I do trade in algorithms. I have a company called as Exotic Investment, where I have software developers who develop the bots for me, so that my brain is imported, or so to say, exported into the algorithms, that is the software bots, to trade for me. So I trade in algorithmic bots. Though I teach the trading, I actually can't control my BP itself when the market is going higher and when the market is going lower. Before it reaches the target, it just jumps down. That's like pounding so much inside your heart. That's too much. It's ridiculously bad at times. However, yeah, that's the ups and the downs of the market. Okay, traveled 69 countries with the money I have from the businesses, own two companies which are thriving on their own. I have to do nothing, not even move a pencil inside that company. So that makes money for me. That's 100% passive. Read at least two books a week. So this is very new, uh, very much to say that even Elon Musk, who has developed SpaceX, which is the space company which he has created to put up all the satellites into the sky, he learned everything from books. Okay, and Mr. Warren Buffett mentioned that he reads at least about 100 books per year. So I have thought of listening to audiobooks and reading at least two books a week, and I have already started for last 3 months. Speaks a lot of stock market jargons. Yeah, of course, I am into stock market, and Mr. Rakesh Junjanwala was saying, even on the first night, I was talking about stock market, and my wife has almost taken my shit for almost about 25 or 30 years or something. So he is one of the big bulls of India, who is also the owner. He who was also the owner because he is no more. However, Rakesh Junjanwala also used to talk a lot of stock market jargons. So am I. Okay. So what will touch base in the basics of stock market for beginners is basic terminologies, the stock exchanges, why are they required, and what are stocks, how do they change hands, and will stock market be a stepping stone for your success? Does stock market beat the FD returns? Can an ordinary person like you invest in stock market, and steps required to start your stock market journey? So let's jump in, let's go head on, and let's tackle each and every one of these topics over here. Okay, all right, let's jump in. So, a simple saying from Mr. Benjamin Franklin is, an investment in knowledge pays the best interest. Okay, just to be very sure that whatever you invest in upskilling yourself will pay 100 times dividend than whatever you pay for others to make you money. Okay, so in the 4 hour work week, what he says is, I don't read each and every news in the newspaper. For that matter, I don't read any newspaper at all. That's what Tim says. In the 4 hour work week, he asks probably a waiter about what is the news for the day. If it can help me in any way to inculcate it in my daily routine, only then I will listen to that news. That much he cares about the money or the time, because time is money for Tim Harris, who has written the 4 hour work week. So it is for you as well. So if you keep on trading time for money, you will be working for the whole of your life. That is what Mr. Warren Buffett says. So let's jump into all the contents of this particular webinar. That's the basics of stock market for beginners. Let's jump in. So let's talk about the basic terminologies. Okay, there are so many terminologies in the stock market. As I already mentioned, stock market is like jargons, filled with jargons. You have to put a double quote for each and everything over there in stock market. However, let's cover the basics which are very much required for you only. Okay, so what is a trader? First of all, a person who buys and sells in the market for shorter term is called a trader. So he may probably buy something, buy a stock or a share. So we have what is a share in stock as well. However, let us say Infosys. Infosys is a company, right? Infosys has given its shares in the stock market, and you can buy the shares in the stock market. So those shares, Infosys shares, are bought by a trader, and he wants to make, probably it is somewhere around 1,700 rupees per share. So he wants to make a quick buck out of it. So he will probably buy 10 of those trades, or 10 of those shares, and he will probably invest that money and take it off probably within 3 days. If it is 1,700, if he can make 50 rupees out of that 1,750, he will make it and just get out of it. So that is what is called as a trader. He wants to make a quick buck out of it. All right. uh, Mostly traders are chasing fast money. So yes, everyone is trading fast money in the stock market. So market is always not very much giving. It actually is taking a lot from the traders. Okay, so it will actually take a lot from the market, from the novices, and it will give it to the people who actually have a lot of money. Okay, so smart money flows and smart money goes. So when the smart money comes in, there will be the novices who will invest at the highs, and smart money will go. At that time they will probably look like buying once again, because it is market is going up and down. So when they buy over there, their market or their share, whatever they have bought, that will come down. So smart money draws all the retail money into their wallets. That's what happens. So investors, heard of Rakesh Junjanwala, as I already spoke about him, or Mr. Warren Buffett. Mr. Warren Buffett was one of the richest persons in this world. So how did he make his fortune? By stock market trading. Does it mean that he has never lost money? He has, but anyways, he has always recouped his money. So whatever the returns he make, Mr. Warren Buffett, whatever the returns he makes about 20 to 30% per month. However, the normal trader only makes about 2% to 5% per month. So that's the greatness of Mr. Warren Buffett. Okay, both are investors. Rakesh Jhunjhunwala and Warren Buffett both are investors. They buy shares and they wait for it to reap the benefits in a long term, that is years and years to come, and they will then sell it. So Mr. Rakesh Jhunjhunwala has a very big holding in Titan, almost about 6 lakh shares or something. He probably bought it at 30 rupees, and it is now probably somewhere around 2,000 rupees or something. He still holds it. I mean, his company, Rare Enterprises, holds it. So that's the investment, and that's the time horizon he has, almost about 30 years now that he has invested in Titan. So that person is called an investor who invests for lot of time, at least 1 year and above. So shares and stocks. What are shares or stocks? So shares or stocks in stock market means a security that represents the ownership of a fraction of the issuing corporation. So let us say there is a pie over here. So this pie is complete as of now. So if I actually make some pieces out of it, what is it called? It is called a share of a pie, right? So the same way, the shares are shares of that particular company. Probably Infosys has about 23 lakh shares of the company. Okay, if you own one share of the company, it means that you are holding a bit of the partnership of Infosys. That's what it is. All right. So stock exchange, heard of BSE or NSE, that is the Bombay Stock Exchange or National Stock Exchange? That probably means that BSE is Bombay Stock Exchange, NSE is National Stock Exchange, and they are the exchange. What is an exchange? I give you something and you give me something. So it is the same. So I buy something and there should be a seller who sells that. So this is an exchange where the buyer and the seller both are available, and those are the people who actually change the hands with respect to shares and stocks, ETFs, and futures, options, lots of jargons. I will explain each and everything in the basics of stock market in probably upcoming classes. So that's stock exchange. So everything is digital as of now. So you can invest in stock market, everything digitally at the convenience of your home or wherever you are in the world. Okay. Investing, what is investing? Investing means you're buying the stocks of different companies which you feel will give a good return in upcoming years. What does that mean is, if I had bought for example Indian Railways Finance Corporation, okay, I bought that somewhere around 19 rupees or 20 rupees, okay, now it is around 33 rupees. So why do I buy such stocks? Because I see that there is a trend evolving out of that particular stock, okay. IRFC, I suppose, Indian Railway Finance Corporation, okay. So that I bought somewhere around 19.5 rupees, and it is currently at 33.5 rupees, right? So those are called as investing. So you invest at a particular time and actually reap the benefits over a period of time, probably within years. That's called as investing. So you buy the shares or stocks of the company and hold it. So that's called as investing. So, what you have to know is trading and investing. Yeah, we will talk a lot about this probably in upcoming days. Yes, it's very much important for you to understand what is trading and what is investing in order to make money in the stock markets. Yes, we'll talk about it a lot in probably upcoming days. However, I'll try to restrict for the facts, the basics in today's session, because without knowing the basics you can never trade or invest in the stock market. So what are stock exchanges? As already mentioned, BSE and NSE, everything is digital as of now, and BSE was the first stock exchange which was formed in India in 1956. And yes, of course, BSE, Mr. Damani, Ramesh Damani, he was the president of BSE at that point of time, somewhere around 1960 or 1980. He is one of the investors. He is one of the big investors in India as of now. So, Mr. Ramesh Damani. So, during that particular time, everything was called for. Okay. So, take the chits, write the stock name, write at what buy price you will be buying, or write what is the sell price you will be selling at, and how many shares. So they will write it on a chit, and they will tear it and they will give it to others. So whoever wants it, they will assign and they will sell it, or they will buy it using the chits like these. These are the chits which were actually traded during those days, somewhere around 1956. In 1992, when NSE actually came in, that's when the digitalization happened. So the internet came, and the whole of the infrastructure was built around the digital systems, and that is when the internet came and revolutionized the whole of the stock market. So that's it. BSE was formed in 1956 and NSE was formed in 1992 and started trading in 1994. So those are the two stock exchanges where people can sell and buy the stocks, futures, options, and currencies and ETFs, that is the exchange traded funds. Okay, there are so many things which one can trade in the stock exchanges, and there are more like commodities and all. Yeah, we will cover those as well in the basics of in the future classes. Both the stock exchanges are totally digital, and you can trade or invest in the stock markets through stock exchanges. So, what are indexes? Have you heard about Sensex? Have you heard about Nifty? In today's newspaper, in Times of India, in business column, the first thing is Sensex at 63,000. What is that 63,000? Is that 63,000 rupees? No, it is not. It's a index. Okay. So its index, Sensex is an index comprising of 30 companies. Okay. So Sensex is formed with 30 companies having the market capitalization highest to the lowest, and accordingly how much percentage it actually gives for the Sensex to rise or Sensex to fall. Okay, Sensex is the index of Bombay Stock Exchange. And what is Nifty? Nifty is the index of National Stock Exchange. Okay, two stock exchanges, and out of two, both have the indexes of its own, that is Sensex and Nifty. So Sensex closed at a all-time high for last 3 or 4 sessions. It's continuously clocking in all-time highs. Today it has clocked above 63,000, somewhere around 63,500 or something, and Nifty is somewhere around 18,700 and sorry 18,800 levels. That's where Nifty is currently placed. All right, so those are the indexes. Okay, basically, what is an index? An index is an uptake or downtake of the chosen set of the companies and shares according to market capitalization. As I already told, there are so many jargons in stock market. Market capitalization, I'll talk about it in the future sessions. However, as of now, let us say market capitalization means that if I am a company A, let us say I am company A and I have the market capitalization, as in I have the induction of money in this market, including the assets, including the shares of my company, and everything I have in the bank account, whatever the whole of the money I have, probably the shares are worth about 1,000 crores. Okay, and and I hold the cash of about 100 crores, and my company's assets or the I have land and I have computer systems, everything combined, I probably have around 5,000 crores of assets. Okay, and everything, assets and the whole of the shares according to the whatever is available in the secondary markets, and the holdings of the company founders. So everything combined, I have 5,000 uh, crores in market capitalization. It means that it includes everything, whatever the company holds. That is the market capitalization. Okay, as of now, Reliance is probably the biggest market cap in India. As of now, Reliance market cap is almost around 90,000 crores, which is almost about $70 billion or something. Okay, so that's the highest in India as of now. All right, so accordingly, each and every company has its market capitalization. Accordingly, there is a percentage which is induced for Sensex, Nifty, and things like that. Okay, so Reliance is a part of Sensex, Reliance is a part of Nifty, and Infosys is also a part of Sensex and Nifty, both. Tata, so the Tata Motors, that's a part of Sensex as well as Nifty. So each and everything has a percentage by which For example, if it moves by 10 points and the market capitalization, according to market capitalization, Sensex has the weightage of 1.5 percent of this moving up. So if Tata Motors moves by 10 points, and accordingly the weightage of Sensex is 1.5%, then it has to move by one. Sorry. So if it moves by 100 points, it moves by 1.5 on Sensex. So Sensex moves by 1.5%. So accordingly, right? So if it has the weightage of 20% for Reliance, Reliance moves by 20 points, then there will be 20% of that 20 points which will be moving higher, right? So which is 2. Uh, so it is 4 points higher for Sensex if Reliance moves by 20 points. So that is how the market capitalization and the weightage for Sensex is. You don't have to worry a lot about it. However, let us say Sensex goes up when when the set of 30 stocks move up or move down. So whenever it moves down, Sensex also goes down. Whenever the move is up, Sensex also moves upwards. Nifty is a culmination of 50 companies in India, and those are according to the market capitalization. The weightage is given to Nifty. Exchanges choose companies from all sector to be part of the index, and it is not centric on one particular sector. So it chooses companies from cements and automobiles and everything. Okay, gas, everything. Usually, well known top companies are given a higher weightage according to market capitalization. So why are stock exchanges required, man? It's so simple. When there is a particular place where you can buy something like Amazon. Okay, if you have to go to Amazon and buy something, it's a platform where the buyer is also available and the seller is also available, right? So it is very easy for it to change the hands. So that's the reason a stock exchange is required. Just a minute. Uh, so Indian Stock Exchange guarantees the following. It is guaranteeing the security price stability. That is the stock's price stability, and no one can actually manipulate the highs and lows of the stocks. Convenient and transparent place for securities trading. So securities, as in the stocks itself. Okay, this is a secure place. You are investing your money when you are actually buying something, right? If a hacker is actually there and he is accessing that particular terminal, if without security, then he can steal all your money, right? So digitally it is possible. However, this is the secure way how you can trade without worrying about security, right? So it is the transparent place for securities. uh, Help the companies raise money. Yes. How do they raise money? uh, there are two ways how they can raise money. One is called as IPO and one is called as FPO. We'll talk about all those jargons in the upcoming sessions. So IPO is initial public offer, FPO is follow-on public offer. So initial public offer means that there is a company, something like Zomato, they gave some particular shares to the secondary market for them to buy, and this primary market people bought it, and now it is trading in the stock exchange, which is called as the secondary market. So initial public offer is given in the primary markets. Okay, and follow on public offer, for example, then Zomato has actually given out uh, probably 20% of the founders holdings. Okay, and now they want to raise more money, so they want to give another 10% of the company to the secondary market. So they will induce the 10% of the company shares, and they will take the money whenever they are actually traded on the secondary markets. That's it. And promote savings and investments. It's very much known that uh, many people think that investing in stock market is is an investment. Okay, so they want to hold the shares. Very recently I was looking on Quora for one of the answers. One of the questions where the person was actually asking, I hold Infosys from the time when it is 100 rupees, so what should I do now? So I mentioned that uh, this is worth crores of money. So he has to get the stocks. He has it in purchase in the paper. So he has to dematerialize his stocks so that he gets it in the value of money, right? So that's what he has to do as of now. So this is savings and investments. So a stock invested for 100 rupees is now worth crores, right? So that's the greatest part of saving your money in through investments in stock market. So uh, providing estimated services, yes, predictions and estimated services or estimate services. Yeah, this actually means that uh, the market is actually going higher or lower, so people can actually predict the move of the market and say that, okay, India is worth this much in billions or this much in trillions of the money according to the stock markets, so they can predict the value of economy. So this is the stocks. uh, this is the crux of whatever you want to learn in the basics of stock market for beginners. What are stocks? Shares of stocks of a company mean it's a name which suggests it's a share of a company. As I already mentioned, a company offers a particular set of shares to be traded in the stock market. So, as I already mentioned, Infosys, they gave 20 lakh shares, and if you have 100 shares of Infosys, you're holding 0.0001% of Infosys, something like that, right? Any individual with a trading account with one of the top brokerages in India, if you need the top brokerages where you can open the account, the trading account, I'll put a link in the description below and you can access that. I have noted almost about 10 of the top brokerages where they actually give you the good amount of brokerage. Okay, so if you are actually buying in the brokerages on the software which they actually give, there they will cut your brokerage as well. For intraday they may charge around 0.02%, and for delivery, that is when you actually buy and hold the stocks, they may charge around 0.2%. Okay, so that is what is the brokerage they actually charge. So if you make money or not in the stock market, brokers will always make money when you trade or when you invest. Unlike retail stores where you are handed a physical product in exchange for money, shares can be sold without possessing it. Doesn't it look like this is a trap? Yeah, I thought so as well. Anyways, so having said that, you don't have to hold the shares of the company in order to sell them. Okay, you can just sell them just by going to the market and you can sell it off. That's It's that simple. You don't have to. It's not just like going to a retail store where you will hand over 10 rupees in order to buy the Rin soap, right? Or Nirma washing powder. Nirma, you don't have to give 10 rupees in order to buy that Nirma soap. So you can go to the market, you can sell it, you can sell any stock though you don't have it. So it's that simple. Stocks can be either bullish or bearish. Yes. There are two more jargons which are actually coming up: bullish and bearish. So, what is bullish? Bullish means the market is going up, bearish means that the market is going down, right? So, what is bullish and what is bearish? Let's look into it more in the next slide. Yeah, as I already told, bullish and bearish, two terms which you have to understand. Bullish means that stock markets usually reference the company shares going up or positive as bullish. So why do they call as bulls and bears? I actually don't know the reference where it actually came from. However, bulls means it's just roaring and roaring and roaring. It just keeps on pounding each and every time, right? So bear means if a person acts like he is dead and a bear came, bear probably tries to wake him up. However, if he is acts as dead, then it will bow down and go away. That's what bear is. So that's probably the reason they call as bulls and bears. However, bull doesn't stop at anything. It just keeps on going on and on and on. It just keeps on roaring, right? That's what a bull is. So bulls are the set of people who have the money power to move the shares of the companies higher with a huge buy orders. So this is called as FIIs, DIIs, and smart money, HNIs. Okay, lots of jargons. Yes, FIIs means that foreign investment, and DIIs means domestic investments, and of course HNIs means high net worth individuals. So people who have crores of money, right? Probably very recently I read an article. uh, in order to make about 2% return, IIFL invests almost about 20,000 crores in the market to make 2% returns per month. Okay, so that is how much they have to invest in order to make those 2% returns. So that's called as bulls. So when such money actually enters the market, particular stocks and the index starts going up. So those are the bulls. Bearish means stock markets usually reference the company shares going down or are negative as bearish. So if the market is just going down and down and down and down, that's called as a bearish move in the market. Okay, it can be for the stocks, it can be for the index, or it can be for anything which is traded in the stock market. So bears are the set of people with money power to move the shares of the companies lower. So they can move the company's stocks lower. If the market participants call the market bullish, it means that the market is going up. If they call it bearish, it's negative or market is going down. That's it. I hope you have got the understanding of little of the market, bullish and bearish. Yeah, we have a lot to cover. How do stocks change hands? As I have already told, on an exchange, there are bulls and bears. So these people buy or these people sell, these people buy. So when they put it, they take it. So those are the stock exchanges where it actually changes hands. However, there is more up for it. People interested in stock trading or investing will not have the basic knowledge, and they will just jump into the market, and they will always look for quick money out of the market. So these are get rich quick schemes. uh, I have noted in one of the Quora answers, I suppose, in today's session, the market went all the way up, almost about 100 or 150 points up in Nifty in the morning. However, it constantly fell down in today's market. Is it called as bullish or bearish? It can be called bullish because it has risen from the previous highs. It is at the high. However, when we actually look at the chart, it is constantly, slowly, consistently falling down. That's a bearish turn. Okay, so people think that it is bullish and they will buy it because it is 55 points down, 50.5 points up. However, when the market actually started, it was almost about 150 points up. People don't understand that, and when they buy at the 55 points down, points up, then the market is still falling down, right? At that point of time they will lose money because the market is anyways falling down, and they don't look at the charts, but they will look at the hunch feeling and they will buy it. So many people ask, why do my stocks fall down as soon as I buy it? Because you don't know how to look into the charts and where to actually buy. When the trend is actually starting, that is when you have to buy so that the market actually goes upwards. It's not like when it has already gone up, you're buying it over here, and probably it may go 1 point higher, but it does not reach the target and it will fall down because the smart money is already withdrawing the money from the market as of now. So that being said, okay, so some of them are actually asking me some questions. Let's see if there are any questions. uh, yeah. All right. This is okay. Let me make it this way. All right. So yeah, how do you actually see my screen as of now? Is it showing both? Okay, just 1 minute. I think okay, now it is good. All right. So let me complete the screen as of now. Okay. All right. Let me take this and move it upwards. Okay. Okay, so does it look good as of now? Does this actually look good? If that is the case, then please do let me know. All right. So okay, so let's jump in and let's understand more of the markets. We have a lot of cover. Let me go a bit faster. How do the stocks change hand? Stocks are traded on desktop software you're given access to. So you are given access to a software, a stock market software where you can have all the scripts added, that is all the shares added of the companies, and you can buy or sell according to your whims and fancies in that particular desktop software, or you will have access to a mobile software as well. Every trading account also has access to the mobile apps, as I already mentioned. Your software gives you access to the stock exchange where you can buy and sell shares, futures, and options. Yes, more of it coming in the future classes. Basically, you are your own boss if you want to buy or sell anything in the market. Given a 10% chance of 100 times payoff, you should take that bet every time. This is told by none other than Jeff Bezos, who is the founder of Amazon. He is the second richest person in the world. Okay, so he says that given a 10% chance of 100% or 100 times return, for example, if I invest 1 rupee and I have a 10% chance that the stock may go up to 100 rupees, and that is the place where you have to take that risk, is what Mr. Jeff Bezos says. Yes, of course, stock market has the risks. In the short term, the investing in stock market can be risky. However, in the long term, if you don't invest in stock markets, it is riskier and riskiest because you will lose a lot of money without investing in the stock market. Okay. So, will stock markets be a stepping stone for success? Yes, of course. Yes, of course. I can say Mr. Warren Buffett got rich by investing in stock markets, and usually the stock market has risen by almost 12% year on year, almost every year since the market has actually been started. The since this index has actually started, it has given 12% year on year. Show me one, if you have FD which actually gives 12% returns per year. None of it. Okay, so that being said, yes, of course, it is a stepping stone for success if you know where to invest in the market. Yes, of course, market can come down in a short term. However, over a long term, it has always risen. Okay, stock markets will usually be two steps ahead of FD returns. As I already mentioned, if it is 6% what the FD is giving, the market will usually give 12%. Can an ordinary person invest? Yes, of course, man. You, me, and everyone in India can invest. Or any person in this world can invest in stock market, because every country has its own index, every country has its own stock markets, stock exchanges. Okay, even Pakistan has its Karachi Stock Exchange, man. And yes, of course, there are so many hacks and that this in Pakistan and all. However, they have a stock exchange and they can invest in that. So everyone in this world can invest in stock markets, until unless you are 18 years old and you are an adult and you have a bank account, right? So just those requirements. If you are an adult, you can invest in the stock market. Yes, absolutely. Let me show you how. One cannot go directly to the public, right? So, if I have a big company like Infosys and I have to give 20 lakh shares, will I actually go to each and every person in order to distribute these 20 lakh shares? Please buy my share. Please buy my share. Is it actually possible, feasible? Not at all possible, right? So they come to the stock market, and the stock market actually takes it to the public, where the public actually buys it if they actually think it is good. Stocks must be bought and sold through exchanges. Yes, of course. Exchanges give access to the terminal through brokers and sub brokers, and those brokers and sub brokers in turn give you the software and the app where you can invest, where you can log in with the brokerage code, whatever the username and password they give. That gives you direct access to the exchange, where you can buy anything and buy sell anything, right? Once a share is bought, it is stored in a digital format called as a dematerialized share or stock. Okay, and those are stored in CDSL or NSDL. Okay, so NSDL and CDSL, those are the two companies which actually gives the vaults for storage of your stocks. Okay, in the digital format. So, what are the steps required to start your stock market journey? First is you have to open an account. I'll put the link for this in the description below. Okay. First of all, if you are liking this video, click the like button and subscribe to the channel right now. Okay, if you have not subscribed, please subscribe. For the basics of stock market, I have put the link how you can get the notifications for these basics of stock market live webinars, and you will get it on a regular basis whenever there are stock market live webinars available. Okay, through email. So click on the first link in the description and you'll get access to the live webinars before it actually starts in your email. Do comment how you feel this particular session is. The basics of stock market for beginners is give back to the community. So if you feel that it is good enough, then please do comment how it is. And if you have anything to ask or anything to share, please do put it in the comments as well. Open an account with the stock brokers. There are big brokers like IAFL who give you a big brokerage, which will cut your account very soon of the money. However, there are discount brokerages who are called as sub brokers. They are the sub brokers of big brokers like IAFL and as the big names in this industry, and who has been for quite a long time, like Motilal Oswal. So there are discount brokers like Zerodha, and there are BN Rathi Securities and Navia Markets. All these are sub brokers of the big brokers. Okay, you can open account, a trading account with a big broker or a sub broker. Big broker gives big brokerages, which will cut your money down. Sub broker or the discount broker gives smaller brokerages where you can trade and you can still make money with a bit of brokerage. And this can be done within 1 day. Everything is digital as of now, including the opening of bank account. So the second thing is you have to learn the technical analysis. Technical analysis, I can't stress enough. Technical analysis is the key for trading in the markets. And yes, it can be used for investing as well. I use that to pick my multi-bagger stocks using the technical analysis itself. Technical analysis means that it is the pictorial representation of what has happened in the past will happen in the future as well. So we guess according to the stock markets charts. If the market has risen this much, we will probably rise this much, is what we will guess using the pictorial representation of the stocks. That's what is called as a technical analysis. Knowledge is the key to success. I can't stress it enough. And market will chew you and throw you out if you're not literate. So technical analysis knowledge is the basis of the basics of stock market. Paper trading, after you have an account and you have learned the technical analysis, now you can paper trades, as in take the chits and write down at what time you will buy, because if the market is actually going up or down, you will find it out using the technical analysis, right? So now you'll write it down at what time, what price I'm buying and what price I'm selling. That is called as the paper trade. You are not trading with your right the money which you have bought. However, you are trading only on paper. Okay, those are the virtual trades, not the live trades. Next is you'll put the money in the account and start investing or start trading. Those are the steps required for your stock market journey, my friend. And how do you feel that you have in this particular session? How do you feel? Are you already feeling ecstatic? Are you already feeling liberated that you don't have to just invest in FDs? Wait, there is more to this basics of stock market for beginners. And in the upcoming sessions, I will give you all the basics of stock market, like technical analysis, what is futures, what is options, all those jargons will be will be taken one step at a time. Okay, so you can't just eat the whole of 10 days of meals in one particular day. So wait, and you will get all the information, and then you can very easily invest. So if you have walked all these steps, you get to start to trade or invest. Yes, of course, you have not uh, traveled all this journey, because the destination is not the destiny. The travel or the journey itself is the destiny. Okay, so that's what is important. So you can't say that I have traded 1 day and I will stop the next day. It's not possible. Or I have invested in one stock, I'll not invest in anything else, because the journey itself is the destiny. Okay, so please wait. You will get a lot of knowledge in the market, and yes, you will surely make profits with stock markets for sure. If you've walked all these steps, you get to start to trade or invest. Start small, as loss is inevitable in the beginning, because your hands has to get inculcated to the buying, selling. There are so many times that I have bought a different share in order to buy Infosys or some other share, right? So it happens. So you have to get inculcated to whatever the trading journey is, whatever the investing journey is. That being said, let us see if you have any questions and answers. And if at all you have any questions, let us take it. Yes, yes, okay. We have one question here, which I have actually seen. All right. Thank you, Mr. Abhyant. He mentions fantastic explanation. Yeah, thank you. All right. Um, till now it was a jargon for me. All right, thank you, Mr. Abhiyan. Okay, so if you have any questions at all, I am more than happy to help you out. Okay, so one particular question which everyone usually will have in the stock market is, how do I start my journey? How do I actually start where to learn the stock markets? I have authored a book, Basics of Stock Market for Beginners, and that's available in the link in the description below as well. So you can take a look at it. If at all it actually is helpful for you, then you can buy it. It is available as low as just 79 rupees. So you can just buy it at 79 rupees. And Basics of Stock Market for Beginners book is available for buying as of now on Amazon. Okay, so how do I learn about stock markets? Yes, I'm here with all the live webinars and I will teach you everything whatever is required. That being said, that we have covered enough in today's session, and if at all you have any questions at all, let's see the basics of stock market of for beginners edition 2 looks like this. You can buy this if you want it. And of course, I have given you two killer technical analysis strategies to make money right away in the market. Okay, these live sessions, yes, this will go on for weeks to come. And if you really want the fast path to success, then you can read this book. uh, this is authored completely by me, has around 169 pages. Yes, it's most comprehensive guide I have actually given in for the basics of stock market. You will learn everything of the stock market, mutual funds, and stock market investing, stock market trading, and you will learn the techniques, the technical analysis. Everything is there in this book, and it's available just for 79 rupees, and you can very easily grab that book on Amazon. Just look for the basics of stock market for beginners, and this is the edition 2, which is the revised edition, which I launched in probably around October. So now it is available at the fair price of 79 rupees. Very soon it will be around 149 rupees. So that being said, this is my contact, ashok.rao at exoticinvestment.com. If you have any queries, you can reach out to me, and I'll be more than glad to assist you with anything at all. Okay. That being said, that's the end of the first session of Basics of Stock Market for Beginners. And this is your host and those, Ashok Kumar. And this is Ashok Kumar signing off for the session 1 of Basics of Stock Market. I will see you on Saturday at 6:30 for the Basics of Stock Market for Beginners session 2. That being said, this is Ashok Kumar signing off. As I always say, knowledge is queen and action is king. Subscribe to my channel, like this video, and share this with everyone who actually wants basics of stock market knowledge. That being said, namaste from Ashok Kumar. Thank you.